Welcome to tonight's Nightly Market Intelligence Report. This is Jeff Killian, the Chief Market Strategist for the Inside Technician, and today is December 4th, 2013, and the time is 7:39 p.m. Eastern Standard. A major change in today's action for our actionable intelligence that we want to report tonight is that we have a new smart money bias market trading call that has been increased to a short level numeric value of 7. We have gone from a strength of a level 6 on the short call now to a level 7 in strength because of the range, the probe that is hit, the secondary level that we have just laid out on the most recent reports for support. Let's talk about this here. What we know is that the pivot point was completed here. Blow off here, 1, 2, 3-day pattern, getting through the support level at 16,009.99 that we had laid out well in advance. Everybody knows this who follows this report. Secondary real support level right here at 15,876.16 was rested at today for quite some time and then traded all the way down. Just a few points short of what we had laid out here at this level, broadcasted out into the future at 15,783.10. Now, this highly suggests that prices will continue to trade to the downside to close at that area. And this is why, in part, in isolation, the price chart pattern, then as compared to the indicator formations that will run through that have more momentum to the downside, was the reason to change the market bias trading call from a short level 6 now increasing in strength to a short level 7. Once again, no smart money volume in yet, which leaves us at a controlled, slower sell-off as every day comes to us. Here on the Chaikin money flow, another trend line violation here just happened on the most recent action, acting as another confirmation that prices can continue to trade to the downside. More downward momentum here out of the advanced decline oscillator. And here, the disparity between the MACD and the signal line continues to widen as the prices trade down, confirming the strength of the trend after the change was initiated here by this indicator in isolation continues to grow in strength to the downside. More momentum here, more downward movement out of the SMI, another confirmation. And here, look at this confirmation out of the short-term money flow index right here, getting out of the pattern after a negative divergence trend line violation which created the pattern. And all this downward momentum here because of today's action closing at 15,889.77. Great indication for future directional price movement right here. Everything adds up at the end of it all, even though we have no significant smart money volume behind this, that we have not only confirmed the market turning point that we identified and called. We are going through this every single day, blow by blow, looking at how the prices reach the levels that we've laid out in advance. Let's get into the ETFs and talk about what's hot and what's not. On 40 financials and the corresponding ETF symbol traded against it, XLF, we are short again tonight. And you're going to hear a lot of this. We were short again tonight on 10 Energy and XLE, staying short after getting in here. This, after a brand new call just on yesterday's action, we've been waiting for the longest time, and 25 consumer discretionary, and the ETF symbol XLY traded against it. We remain short again tonight. Nice down move here. Closed at 484.31. And here, another nice down close. Nice probe here to the downside at 652.20 on 35 healthcare and XLV. We're short again tonight. Let's take a look at something a little different here. Sometimes the market will find utilities as defensive in nature. It is possible the prices are moving sideways because if the market decides to provide us with a lot of smart money volume sell-off, that it will tank. And if it does, the same market may find utilities as defensive in nature. And if that happens, then prices may trade to the upside sharply. So we're short tonight, but stop in place, covering ourselves. Here, interestingly enough, again, we talked about this last night, the greatest degree of positive relative strength out of any one of the 10 sectors within this organized database, and this ETF traded against it, XLK. Amazing. Sitting there, moving market net neutral as compared to a sell-off within the U.S. markets. That means if the markets stop, all the indexes prove out, the Dow, the S&P 500 equities and futures, to land for a short period of time and trade sideways and form a channel, go net neutral, that this should take off to the upside because of its lack of ability to trade down following the market. Here on 30 consumer staples and XLP, we have a situation where we have another probe to the downside, very positive for the short move that came in at 1462.50 that we called back on the report just a few sessions ago. Closed down at 461.67, and because of it, we're short again tonight here as well. 15 materials and XLB, again short closed and a minor up close at 294.95, but we remain short here. Nice moving play right here, closed at 153.61, short again tonight because of it on this and XTL. And that brings us to the end of the line out of the 10 sectors within our S&P 1500 organized database. Short came in just yesterday at 1460.50. What an excellent call for the precision, and closed down today at 456.90. We remain short tonight because of our smart money trading methodologies, identification of this trade. Let's get right into the futures and talk about what's happening here on the new overnight session. You know, a lot of services will just report at the end of the day when the market closes. We could do that, but we choose to wait until the overnight session opens and is in play, because rightfully so, this is the information that needs to get broadcasted to you, so you know where you stand, for the overnight session, if that's what you want to trade. So again, fast forwarders, we are now at a short level 7, an increase in strength to the trend, with the trend to the downside. We're now marked to the market. MTM trading at 1792 flat right here, right where we just about closed at today. The current support level, we would normally need 3 closes below 1793.25 in order to make that happen. In this case, I'm believing at this point this market will trade down and close down. And although its current support in the overnight session, even shortly as soon as equities open, this could be more than 80% of the way there, that this will be the new resistance level at 1793 in place of what we currently see at support. The next level to the downside that has been hit by the probe as well, like the Dow, but not the same because of the chart pattern differences, is 1779.75, below that is 1768.25, and 1753.75, and there obviously is major support at 1744.75. The indicators, more disparity, widening on the MACD. Yes, positive for the short play. More downward momentum out of the SMI indicator. More out of the Chaikin oscillator. And let's take a look at the Chaikin money flow, evening off here a little bit, but the relative comparison between the most recent peak and here and here and here, that's 3 back, is nowhere near how far the prices were as compared to where they are now. There's a lot of distance still to go in these prices. The only thing we're lacking at this point is some serious volume that needs to come in on the equity side to add fuel to the fire on the future side, which is coming again today, for the short-term money flow on the equities to look like what we see here. We had trendline violations, 1, 2 to the upside. That's totally been eliminated, and now we are back to the downside here going to flip this right back around in real time as we do the report and talk about another brand new trend violation that we want you to identify with on the downside right here. So once this level was broken here at this point, and the momentum from the last two sessions carried it down, it was clear to me that once again, short money is leading in the futures. Now, getting back to the absolute levels that exist, this is where you are. This is what we want to pay special attention to for the rest of the week. And tonight, we have a very special presentation of one of the best trades that has ever been identified by this smart money trading methodology that was designed by myself over 20 years ago. This was one of the best setups that I have ever seen. And I wish in some ways that the market wasn't in such, a sell-off mode and had actually gone from a 6 to a 7 because it was a long trade. The final try, the market trading back up intraday, trying to gain some of that loss back from the market turning point. Well, it didn't work out because, as you know, prices turned right back around and traded down sharply. But the up move was just incredible. The speed as I'm watching this happen in real time after I got in, it was incredible. Just a great, great trade. So here we are, and let's take a look at it. On the 15-minute chart, looking at the MSI, we had a resistance level at 1788.50 that was outlined by these prices as things were set up to turn right back around. And here we have the positive divergence that's established. And I can tell you, as this indicator got to this point right here, crossing from below to above 50 level here, prices were just getting through here. Now, as you look at the after effect of what happened after this positive divergence, getting through the 50 level and the cross and the upward momentum, prices shot up sharply. So this is a level we wanted to pay attention to, 1788.50 for today. And as we go through it, you'll see time and time again another positive divergence on shaken money flow. Here's the level again at 1788.50. Long before this level was ever penetrated, this is the setup, and it is strong. This is obviously a shakeout here as identified by the positive divergence as compared to that price point. And here we are. What happens in this case? Look at the volume that came in here at the shakeout. This was the volume that decided that this would be the price point that would be the absolute bottom on the 15-minute charts before prices turn right back around to hit the brakes, and that would be the end of it all. Trendline violation on the MFI, full upward momentum before this trade should have ever been considered to be taken. There's the MACD cross, and again, getting back to the 1-minute charts, here's a level at 1788.75, just a tick higher than the 15-minute charts, where you really wanted to get through if you were considering to be long. Here's your base volume that's accumulated here at this point that showed up on a singular spike in the 15-minute chart right here at the shakeout. And then the subsequent volume on accumulation comes in to get through this level and then drive the prices up. Here's price profit target 1, 2, 3, 4 right here. And this is exactly the level that we got out, watching, monitoring as the prices moved up and blew right through these levels. It was just unbelievable, the speed of this move. And those of you that saw this, I'm sure that you were about as blown away as I was, because this is something that every trader waits for. So for today, getting in at 1790.25, 10:02 a.m. for only 20 contracts because the market is trading down. Out at 1795.50 at 10:11 within a 1-minute bar right here based on this price profit target. What happened out of the deal was a net gain on the trade for 5.25 points. Thank you very much. Times $50 for every full point move brought in a net gain per contract of $262.50. Times the 20 contracts that were traded brings a net dollar gain for $5,250. That concludes the report for tonight. We will see you tomorrow on the next Nightly Market Intelligence Report.